Welcome, wise investors, to another daily financial market report. Today is the first day of February, and let's go over the updates. So there's a couple of things that I want to talk about before we actually get into any graphs or anything like that. I want to actually go over the report and just kind of go over some of the markers that have been updated and the meaning behind some of the markers, as well as a new portfolio that has been created as of today, as of February 1st, 2022. And the purpose of that portfolio, which actually corresponds to the whole point of what I'm talking about, which has to do with these markers. Okay. And I want to get right into it so that you guys who have been following along can understand exactly what this all entails. So let's go ahead and dig right into this report, and specifically the markers that I was talking about here. Okay. So, as some of you guys already know, we have current market value. We also have current market movement. Now, we also have on this report what you see here that's highlighted called stressors. These are stressors. Now, I've talked about this before in previous videos, but I'm going to go ahead and explain to you guys what this means. Now, I do talk about it in the video series that explains the strategy. I believe it's called Understanding the Forex Helper Strategy, but it's pretty much about the daily financial market report. There's a series I did, I believe it's a 7-part series about understanding the daily financial market report. Go ahead and check out that video series. It should be either the last 2 videos within that series or the last one, but I do talk about these stress indicators. But the good thing about it is what I decided to do now is to highlight these stress indicators. So then that way you can go ahead and see it, it'll pop out more. Now, these stress indicators also represent a direction. They actually represent a direction. Now, the direction that they usually represent is opposing itself. So it's an opposite direction, contrary to the current market movement. Okay, so I'll just go ahead and give you guys a visual demonstration what I mean by that. So we see here Australian Canadian dollar current market movement is a sell. So if there's a stress indicator in the current market movement area, that means by default it's automatically considered opposing. It's going opposite of the current market movement. So in this case, we see that the current market movement is going in a sell direction. So the stressor means that there's another force that's going in a buy direction. So you can pretty much consider that the same across the board. Okay. The only thing is there's no arrow icon. So you just have to know that. Okay. There's no arrow icon. All right. So if we go here, we see the first one is a buy. So if this is a sell, that stressor is a buy. Okay. If that's a sell, this stressor is a buy. If this is a buy, that stressor is a sell. Okay. And so on and so forth. So if this is a sell, this stressor indicates a buy. Okay. And here, now that stressor, when I say it indicates a buy, when I say it indicates a sell, it's another force. Just think of it as another layer. Okay. We have current market value, which is CMV. Okay. That's the top layer. We have current market movement, which is the middle layer. And then we have another layer here. Okay. Which represents the stressor indicators. Okay, so you could kind of think of it. It is a part of current market movement. It's just a more faster current market movement. Okay, now Whenever we have a lot of stressors just like this, that's usually an indicator that the market is extremely volatile. We're going to see a lot of different movements. You can see here as I'm going through this report, you can see it's highlighted, there's a bunch of highlights here all over the place, okay? So there's highlights here, highlights there. That'll give you an idea, an indicator as to what's going on in the financial marketplace, okay? So we got tons of stressors there, okay? Now, what I wanted to point out was this. What I decided to do is I wanted to go ahead and create a portfolio, like I mentioned at the beginning of this recording. I wanted to create another portfolio that will pretty much follow what's going on with these stressors. So I'm going to hold on to that portfolio for the whole year, like I'm going to do the other portfolios that you guys are seeing, so that we can see, you guys can all see exactly how everything correlates to this strategy, how this strategy works in relation to not only current market value, but also current market movement, but even more so how it relates to current market movement stressors, stress indicators, or the different forces that are attempting to interrupt, let's just put it like that, interrupt the movement, okay? Now, two things could happen. It could either change direction or it could either return back on course, okay? Now, which one is going to happen? To be honest with you, we don't know. There's no way to tell. At least we don't have a way to tell. Let's just put it like that. But for the most part, again, since the strategy is very technically based, it's always known after the fact. Okay, so that goes into that whole aspect of the strategy as well. So once current market movement changes, then that's when we change our position. Okay. But to do it before the fact, no, we don't ever do that. We only change positions once we get that final confirmation and we actually see the positions change. So now let's get right into the graph so we can go ahead and see exactly what is taking place across the board, as well as let's take a look at this new portfolio that is supposed to follow these stressors, okay? Now, what you're going to notice is this. Whenever the stressors are all aligned, you'll see a whole lot more movement, a whole lot more flow, okay? But I don't want to say too much too soon. It's better to look at the graphs and look at the numbers so that we can just see visually, mathematically, what is taking place, how these things work, and how they function. So let's go ahead and take a look at my FX book and see if it even registered, because I did create this about maybe let's say maybe an hour ago or something on the, so hopefully it updated within that time. Okay, so let's go ahead and look at the portfolios, and yeah, it does look like it updated. I can see the little movements here. Okay, so we do have the stressors here. Okay, so the stressor has been added. There you go. It's called Fast CMM stressor. It's the last one. So the trades have been placed according to the stressors, but it hasn't registered yet. Okay, so we don't see anything registering yet, but we do see some very interesting movements. We see some volatility, of course. We see this down movement with the first bar, the purple one here, which represents current market movement. That's our overall current market movement strategy. Current market movement strategy, that's the first one there. We definitely see an attempt to regain some of the drawdowns that took place. Okay, and let's see if we can isolate a couple of other ones here. All right, so we have, let's go ahead and isolate a few of these here. Okay, All right, so we also see a similar movement with our CMM account high lot size as well. We see the same type of attempt to regain some of the drawdown effects. Okay, now I do want to say this. Because of the stressors, what you're going to find is this. This is usually the common pattern. What you're going to find is this. The stressors act as an opposing force. They are an opposing force. So let's say you took a trade according to current market movement, and you're taking a buy position on current market movement. You took an asset and you decided to buy that asset and go in a buy direction. Okay. What happens is a stress will come somewhere along the line. So that means there's going to be a force that's going to attempt to either bring your asset down, or it will eventually, the force will eventually give way to your assets position. So there's going to be a force that will always come, that will always oppose your position. That's a given. Always know that. But the question is this, not whether or not the force will come. The force will come. At some point in time, it will come. But the underlying question is this. Will the force be strong enough to either change your position, or will it finally just give way to your original position? So those are the two things that you need to ask yourself and be concerned with. Okay, so this is one of the things about current market movement. We leave our position the way it is. We let it play out. Okay, we let it play out. You have to allow it to take its course. Okay, so this is what we do. So this is one of the reasons why you may see a position, and you see that position maybe at $50. Okay. Or let's just talk pips. It's at 50 pips. So then the force comes along. Once that force comes along, whatever that force is, it could be a sell force or a buy force. But once that asset is being tested, you will start to see a significant drop. Now, it varies on the asset. Some assets you'll see a very, very violent force come in and bring that asset down at a very, very low pip drawdown. So from that 50 pip, you're going to see it drop down to probably a -30, depending on what's going on, how strong the force is, what type of asset, okay, etc. But you're going to see it challenged. You're going to see it be challenged, okay? So that's what's taking place. It has to happen. Now, I'm going to go ahead and close out with this final point. So one of the reasons why we want to be able to follow the trend and the patterns of the stressors, so then you all can see how the stressor portfolio, the graph, how it correlates with the current market movement. You'll see some very interesting patterns. You'll see some very interesting moves, okay? Especially when it comes to those assets that are perfectly aligned. And I mean completely perfectly aligned. That means current market value, current market movement, along with the fast current market movement stressors. You'll see how they all align and how the profits begin to surge. And you'll be able to see from so many different aspects, so many different angles, how everything works. Okay. So I can't really show you the thing, because let me click on it here. And you can see here, it didn't update. It's been 3 hours. So 3 hours ago, I just made the trades less than 3 hours ago. So it didn't update yet. So you haven't made any trades yet. So I haven't picked it up yet. But once it picks it up, we'll be able to see exactly how everything works according to all of the current market movement or fast current market movement stressors. And hopefully that'll be another tool in your kit for those wise investors out there that are looking to utilize the daily financial market report wisely. Okay, so thank you for your time. I'm going to go ahead and get going here and get things moving. So remember, only winners invest in their minds for wiser returns.